Some of y'all have been getting pretty heated in the comments of some of my opening range breakout videos about whether this trade even makes sense, if it can be profitable, whether some of these rules that I use are stupid, or maybe there's some better ones. Some of you are polite, some of you are not. But instead of arguing in the comments, I thought we could just take a look and go ahead and run some back testing. And I do have an automation for the opening range breakout that I use with NinjaTrader. You can find out more about that at this link. We're not going to spend a lot of time on that today, but I wanted to start there because when I was developing this bot, I was hand back testing all of these strategies, and I came up with the best option that I could for this trade with looking at days and days and days of charts and figuring out just statistically by hand what worked the best. And I couldn't test a lot of variables that way, so I built the automation, but I found that while it trades really well, it's kind of cumbersome to be changing all of these things and adding all of these things all the time. So instead of messing with that, I just went ahead and built a backtesting system. So I'm going to take you over there and we'll test my original version against some other versions. And there are so many variables that you can do with the opening range breakout trade because, contrary to some of the rude comments, this is an old trade that has been used by traders for a really long time. Even back in the pits in the old days when everyone was calling in trades. So I have my little orbit lab here and I've loaded data for the micros, MES and MNQ. And this is a big point. Futures are really leveraged. They're very, very highly leveraged. That means our risk can be a lot for an opening range like the New York Open, where we have a lot of volatility. So I always use the micros for this, especially because I know a lot of y'all like to use these strategies with prop accounts. And that's not a $50,000 account if you have $2,500 a drawdown, right? So we have $2,500 a drawdown. We can't take 150 points of a Nasdaq stop loss, but we can with the MNQ, right? So that's the kind of thing we'll look at. Okay, so I'm going to go ahead and set the date to test this from January 1st, 2025 to May 1st, 2026, because that's the data that I have loaded to this right now. And I'm going to start with MES and then we'll compare to MNQ. And this is exactly the way I run it. So we've got the 15-minute opening range, starts at 9:30 Eastern time. We're going to kill any trades 10 minutes before the trading session ends because the trading session is 390 minutes, which technically will override this quitting time. So that's fine. But the important thing here is we're going to take up to one entry a day, which means we're not going to re-enter if the orb breaks again and we're not in a trade, but we'll allow up to 10 contracts. But here's the way this works. So we're going to allow a max risk of $300. And I get questions all the time on why my automations won't work, like the Orbi bot. And it's usually because someone's running it with $300 of max risk and they're trying to run it on NASDAQ contracts. And there's a really important point on why I'm using the micros for this. And that's because the New York opening range is extremely volatile and the ranges are massive. So it does not allow us to take these in these smaller accounts, whether it's your own self-funded account that might be 4 or 5 figures, or a prop account where even if it's a 50K, you're really working with $2,500 a drawdown, or maybe even less if you've had trouble in that account. So we cannot be trying to trade a NASDAQ with a 150 point stop loss. We've got commenters telling me that, and yeah, that's why we're using micros. So we're on the MES right now, which is using NASDAQ, but we're going to come back to that one. So if I have a $300 risk, we are going to know what the opening range is, how many ticks that is after 15 minutes, and we can just take a calculation because we know how much each tick is worth and figure out how many contracts we can take within our $300 of risk. It's going to be less than 10 anyway. But that's what that's for. And this is a really important part of this strategy. We're not just going to take one every single day and hope this works in the long run. The target and stop loss is going to be 1 times the range. And this isn't very much, I know, but I think we'll get into later why I use this. But we're going to take the opening range, and that's going to be from our entry, which is immediately the break of that opening range. It's going to be the distance to that opening range. So 1 times the opening range for the target and the stop loss. That means our stop loss is going to be on the other side of the range. And when you run it this way, over a year or two or three, we end up with pretty close to a 50-50 win-loss rate, and that's not going to work with commissions and everything, right? Obviously, that wouldn't work. So what I have done to improve that, or in my testing, what I kind of found out was if we trail our stop loss to break even after we're halfway to the target, we get rid of a lot of those losses. We do cut some of our winners also, but the more I've tested this, we are cutting those losses down a lot more than we're cutting the winners down. So this is the way that I've been doing it. It improves. So we may still only have a 50% win rate, but our loss rate might only be 25% with 25% scratches in there. And that's how we get the 1-to-1 to work, which is conservative, yes. Okay, so the reason that I usually use this 1-to-1 is you'll kind of see when we start running this, depending on what kind of market regime we're in on a macro level, whether we're trending or consolidating, that's going to depend on if an opening range breakout, extended target type of trade is really going to work in the market or not. If you're not willing to or able to figure that out and adapt your strategy live, you should probably leave it more conservative, right? And I'm trying to make this really mechanical. Okay, so I have some other filters and things. We're not really going to be messing with these right now. That'll kind of be for later. So if you have a request, I can run some more back tests another time. There are so many different variables that we can have. We can filter by longs and shorts, but I'm going to go ahead and let us do both of those. And then the re-entry doesn't matter because we're only entering it on the first break anyway. So I'll go ahead and run this. And this is entering intra-bar. I'm not waiting for candle close. This is the way I do it. I don't wait for candle close. I don't wait for re-entry or anything like that. So when you're testing this in a lot of back testers, they're going to have minute data, open, high, low, close for that minute, and not all the intra-minute movements. So the back testing results will be different. This is a problem that I was having, and that's why we're here. But now that we're running this, we'll give this a minute to run, and then we'll see how my OG strategy works here. I know it's kind of been rough this year. So this is what I was talking about when the market regime matters, because we've actually been pretty choppy, especially on ES. Even though these ranges are massive, we're still getting a lot of kind of choppy action. When I've run this strategy live, April was a loss of $516. March was $355, and February was not a loss. So that's when we're back over here and we turned a profit of $210. The year before does really, really well. Even January has a little bit. Although if we go change this to the micro Nasdaq and run it over the same period, let's see what the difference is. I had told y'all in the original video that I prefer running this on Nasdaq because it does a little better. And I had run it over a specific period of time, basically a year ago, over last spring. Last spring, MES did really, really great. Right now, these back tests are making me really rethink putting the MES on my live account right now. And it kind of makes you think maybe NASDAQ, this is my original theory anyway, that NASDAQ can survive a little bit better with these breakout trades, even when we're in kind of some more choppy times. So we have the stats here. We had the MES at a loss. The NASDAQ here is at a profit. So we'll see if we can do this any better. What I thought we would do is, because this is a lot of criticism that I've had, is messing with the target that I'm not going for enough. So let's see what happens if we run it over the last 16 months with the same target, or the same stop loss. We'll use the same other side of the opening range stop loss, and then we'll put the target to 2x and see what happens. So basically we're trying to beat $2,216, basically, and our win rate only 36% down here, but we had a lot of scratches. So let's see how this works. Do 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 do. Oh, is that why I traded that way? That's why I traded that way. So we made $1,000 less going for that second target with the same trail. So just for funsies, let's run the MES one, even though that one did not look great last time. We'll see how it goes this time. Yeah, worse. Worse. So we don't like that. We don't like that. So might as well just let's see the numbers for if we go 3 times the target. Not good. Not good. That's the MES one. Let's go back to MNQ. So our 1-to-1 was 2,200. 2-to-1 was 1,200. Even less, 1,100 or 1,000. So if you're wondering now why I don't go for 3 times the range and I stick to 1 times the range, there you go. All right, so I'm going to put it back on my favorite one, which is the micro Nasdaq run on the 15-minute opening range, taking up to $300 risk. I used to allow 500 if you've seen some of my other back tests, and I am using this break even at halfway to that 1 times the orb trade. So yeah, the win rate isn't great, but we end up with, a respectable profit. Probably could be improved. I will say that. I was thinking we could try to run this on candle close because a lot of y'all were interested in that. So let me know if you're interested in that one. And if we do that one, we'll have to test some different time frames. But that makes me think maybe we should run it at some different times of day. And right now I have data for MNQ and MES. So if we want to run it on any metals or commodities or anything else, I'll need to download that data. So let me know. And let's do another one. If y'all are into it, let me know. See you soon. Love you.